Good afternoon, everyone. Trader Tim from emoneymind.com, and I wanted to talk about today's trade. Today's Tuesday, the 23rd of October, and I did a video yesterday, and a lot of the things that I was talking about sort of came to fruition, and there were a lot of good things that we can learn from today, just in the sense that this pattern happens quite a bit. So let's take a look at the E-mini S&P on, let's start with the daily chart. The first thing that's important is when we're in these earnings weeks, you get a lot more gaps, and those gaps tend to fill. So what I mean by that is today we gapped down at the open, but then by the end of the day, we closed the gap. So we closed within yesterday's trade. The other important thing to pay attention to is this tail that we had down here. Notice how we broke the low from the initial thrust down. And then, so we broke that low, but we were able to close positive on the day, close in bullish territory, close above the 50% retracement long. That's something that you see a lot. You get sort of an initial leg down, and then after the bounce, when you break that low again, people tend to kind of go in repeat panic mode, but really a lot of the selling has already taken place. And so this morning, I actually had 4 trades today, 2 winners and 2 losers, and the winners were actually longs, and the losers were shorts, ironically, in the morning session. So another thing that happened today is we had a low tick at the low price of the day, and that signified the low of the day. If I come back, when was that? About an hour into the day, I believe. Yeah, right here. 7:18 Pacific. We had the low tick of the day and the low price of the day. Another thing that I noticed this morning, if we come over to the volatility index, we can see that we spiked this morning, yes, but we did not take out the spike that corresponds to the dip here on the S&P. So this S&P dipped, price today dipped and took out that swing low, yet the volatility index was nowhere near taking out that swing high. So that made me a little more bullish on the day, and sort of thinking, okay, well, this sell-off is likely not to amount to anything because the fear factor, if you will, is not even as high as the prior swing low. Let's see. The other thing that was interesting, and this happens quite a bit. Let me pull up the market profile. So today is the 23rd, and our low today took us down to an unfilled gap from back in May 29th, I think it was. Yep, Tuesday, May 29th. And so this unfilled gap, that's why it's important to keep those written down and handy, because when we sell off, if we've gapped up in the past, on a big sell-off, that's where we tend to see support, or those can act as magnets. So that was kind of the rounding out as soon as we came down and filled that gap. This morning, we rallied. And then the last thing I wanted to touch on is the first hour's range typically does not break in both directions. So here's the first hour's range for today. It's very, very big. And we broke to the upside, meaning we established this range and then we moved up from there. We typically do not break to the downside and then cross all the way back through the first hour's range and then trade to the upside. Sure, it does happen, but very, very few days are in that scenario. And so this morning, when we started rallying and then eventually took out that first hour's high, that was a pretty good indication that there was more upside to come. and so then these pullbacks could be bought as we started to move higher. So this scenario happens quite a bit, where you come down to a big 50% retracement, in this case long. So the market has pulled back, it bounced, and then when we sold off again, we end up with this, yes, we broke the swing low, but we weren't able to sustain and close below that. Buying came back in, and so tomorrow I'd be looking for a break above today's highs and a fairly quick move to take us up to the opposing short. I'm going to leave it where it is for now on this anchor point. If I drew up to today's low, it brings it down a little bit. So I want to see what happens when we get up here near the swing high. If we can take that out and put in a good close on whatever day ends up taking that out, then we should be able to return to new highs without too much issue. But if we come back up here, we get more resistance, and we see some topping tails, then retesting this 27.38 is more likely. So a decent range between the long and the short, as I said yesterday. And today I didn't find it to be the greatest of trading days, as a lot of times some of the bigger body candles are not, even though it kind of turned into a trend day after the latter part of the morning. But in between, these kind of pivotal days and very important days are a lot of good trading opportunity days. So I expect good things to continue. We've got a lot more earnings announcements this week, as well as GDP on Friday, and the other news reports coming out, economic news reports. So a lot of catalysts. Those gaps could continue, but if we gap tomorrow, if we gap up down at lows, that's a good sign. And you want to buy those gap ups when we're coming off lows. You don't want to buy a gap up when we're already at highs. That's more of an exhaustive sign. So keep an eye out for that. Sometimes, in these situations, we might gap up, come down, fill the gap, and then rip. So just keep that in mind, depending on who reports after the bell and some of the other news reports and things like that. We could definitely see more gaps this week. So just wanted to touch on today's price action. And as always, if you have questions, shoot me an email or leave a comment below. That's a great way to kind of get your questions answered, as well as help others as well. So let's have you leave your comments below if you have questions or anything to add. So thanks everyone, and have a great day.